Okay, we never, as traders, guys, the mistake that a lot of people make is trying to predict reversals, trying to get in at the very top and the very bottom of a trend. It's a very difficult way of trading. What you want to be doing is going in the direction of the trend. Yeah, okay, it's a good question. Yes, I want price to not only break, but close. Price has to break and close above a resistance level. Price has to break and close below a support level. I don't just want a break intraday because price can reverse. Okay, so I'm looking for a strong break and close beyond support and resistance levels. Okay, so when we go down to the daily time frame, you'll see that in more detail. Okay, right, so if it breaks 0.8, 0.7, 0.6, so we're targeting thousands of pips here, guys. Now, let's go to the weekly time frame. The weekly time frame, I use the weekly 200 moving average. Okay, the weekly 200 moving average. Now, the weekly 200 moving average acts as a major area of support and resistance. Okay, it's a major area of support and resistance. Again, this is not something I've created. This is institutional knowledge. These are what the hedge funds, these are what the big dogs, they all use this information. Now, we don't want to trade like them. We don't want to use the fundamental knowledge, news, and intraday trading that a lot of institutions use. But it's good to understand how they trade so that we can leverage them. Okay, and as private traders, that's what we want to do. We want to use the market makers to move the market for us. And what we're going to do is we're going to jump on their back and we're going to piggyback the ride. That's the beauty of trend trading. I'm not working for my money. The hedge funds are moving the markets. I'm simply riding the trend. And you can see where price is using the weekly 200 moving average as an area of support. And when it's broken, it will use it as an area of resistance. Okay, here's another area of support. So the weekly 200 moving average is a strong level of support and resistance. So in this case, we're below the weekly 200 moving average, which is confirmation that I don't need to worry about the weekly 200 moving average. But price was in that consolidation area, and here is that consolidation area in more detail. So what I was waiting for was a break in the close below this level here. And you can see there was a little bit of struggle, and then eventually price broke through. It broke through around 0.86, just above 0.86, and is now closing in on 0.80. If we go down to the daily time frame now, if you remember, I said that the daily chart gives me the bias in price action. So I'm going to throw this out there just so I know if people understand this or not. I'm going to ask the question, type it in the box. What do I use to give me a bias in price action? How do I know if we are in a bull market or a bear market? What indicator do I use? Eyes, okay, that's fine. I mean, you can look at it from here to here. Thanks, Boyke. Yeah, but I mean, eyes can work, I guess, to a certain level, to a certain extent. Thank you, Manoj. Yeah, the correct answer is the 200 moving average. Okay, the 200 moving average. Now, you can use simple, you can use exponential. I choose to use simple, okay? So the 200 moving average gives me a bias in price action. So what does this mean? This means that when price action is above the daily 200 moving average, there's a bullish bias. That's when we should be looking to buy. And when price is below the daily 200 moving average, that's when we're in a bear market and price has a bearish bias and we should be looking to sell. So if you really look at this current period of trend, price actually started trending above the daily 200 moving average. But even though it started plotting these red bars, it still had a bullish bias. So the trend was down, but the bias was bullish. So you can see there's a disconnect. The trend is down, but the bias is bullish. As soon as it broke below and started trading below the daily 200 moving average, the trend was down and the bias was bearish. Now we have synchronization between the bias and the trend. Okay, I hope that makes sense. If I pull back price action to here, we can see that the trend is going up. quite clearly. The trend is up. However, between here and here, the trend is up because it's plotting higher highs, but the bias is bearish. Trading involves a level of patience. If you look at this move up, by the time price broke the daily 200 moving average, it was 2 months. February, March, April. It was 2 months. But what do you do when price is setting up on a particular instrument? You are trading another instrument which has already set up. That's why it's good to have an extensive portfolio. If you remember at the beginning, I said I've got an extensive portfolio. Okay, you can see right there. That is because at certain times of the year, only a few pairs are trending and are tradable, while others are either consolidating or setting up. What you want to be doing is moving between pairs that have set up, standing aside on pairs that are setting up or consolidating. Once the trending pairs have stopped trending, you then move to the next set of pairs which have set up. So you want to rotate between trending pairs. Okay, it's fundamental to trading. So let's have a look at the daily chart on the Aussie dollar. And you can see that when price eventually broke out of this consolidation area, you can see the length of this consolidation area. When price broke out beyond this support level, price has moved very, very nicely. Remember, price never moves in a straight line. You're going to have these breather areas. Price moves, breathes, moves, breathes. These are called flags or breathers. These are fundamental to price action. There's a natural movement to price. Now, as traders, we want to embrace pullbacks. Why do we want to embrace pullbacks? Because it allows us to compound or to scale in. And that is how exponential growth is made on your trading account. So currently I have 4 positions running on the Aussie dollar, US dollar. Okay, I have 4 positions running and handing out very, very good profit in the last month. Okay, guys, a quick heads up. Does that make sense? Thank you, Pan on Fire. Okay, fantastic. Right, let's have a look at some other currencies that I've been trading. Right, let's go to the dollar yen. Excuse me. Okay, dollar yen. Nice bull trend going back to end of 2012. All the way through to January 2014. Nice bull trend. However, area of consolidation. Once price broke out, it's now moved on very nicely all the way through to 120. And what do we have? Well, we have some kind of indecision candle. Why? Because 120 is a round number. If it breaks 120, we should like to see price go towards 130, 140, 150, and so on. Right? And remember, the trend is your friend. That's the direction we want to be going in. Let's go to the weekly time frame. The weekly, well, we're above the weekly 200 moving average. Price went through a trend. After every trend, which we profited very nicely from, price goes through an area of consolidation. What we needed was a breakout.